Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now, and it can also be found on our website at crescat.net. All right, welcome everyone. You've just got me today live, and Tavi has a pre-recorded session. His wife is expecting their second child, and so it's like the due date is like now, and so he pre-recorded just to be safe. And Quentin is in the field in Bolivia at San Cristobal, and I think we're going to have a lot of updates today from Quentin. So including a lot about San Cristobal, which, as many of you know, this is an operating silver, zinc, and lead mine in Bolivia, where Crescat funds are the largest single shareholder in this operating mine, and they have a lot of exciting things going on. So Quentin will be given a big update there. And so let me get started. What's been going on here in the last few weeks? Starting, I think it was on, a few months back, back in October 10th, I think some people say was that first initial big down day in Bitcoin, where one of the Bitcoin whales sold, has started this downdraft in crypto and in Bitcoin, along with the rest of the crypto market, this is one of the speculative areas of the market that has really become overcrowded and has been ripe for a correction. We're at Crescat, we have not hopped on to the crypto trade at all. And in fact, we've had a few short positions here recently in our global macro and long short fund that have worked in our favor. But as most of you know, we are long precious and critical metals primarily through our mining portfolio, which is heavily tilted towards the exploration side of things. And we think that's the best value, the best growth opportunity in the market today. So, I just love this picture that was drawn, and this was from the 13th. When Bitcoin was down to 98,000. Of course, this morning it got as low as 80,000. It's around $84,000 now per coin, and this is one of the areas we've talked about the valuations, the speculation, the leverage in the marketplace, the lack of liquidity, the record low cash, the historic high valuations, and in the past few weeks we've been pointing out that look, it's a lot more than valuations. It's the leverage, it's the positioning, it's the speculation, and now all these technical indicators. We had the Hindenburg omens, which we've talked about 2 weeks ago, and these are all these are all indicators that there's a lot of risk in the market and a lot of potential downside in the financial markets, particularly the S&P 500, the NASDAQ 100, the Mag 9 stocks. Let's go on to the next. So NVIDIA reported earnings after the close on Wednesday, and the stock was up in the after hours. They beat on revenues, they beat on earnings, but and the stock was up, and Jensen Huang, the CEO, was extremely bullish as usual about the future growth opportunity for the company. But what happened under the surface? We started digging into the earnings, to the financial statements right after the release, and the first thing that was evident was the cash flow from operations had a significant disappointment, and that receivables and inventories were growing significantly in excess of the rate of growth of earnings and sales. And so it looked like a big stretch to meet the quarter. It looked like a big stretch, and there was a disappointment on the underlying cash flow, maybe a little bit of aggressive accounting in the quarter. We took advantage of this in our long short global macro and institutional macro funds. We actually got short NVIDIA in the aftermarket, and we pretty much top ticked it at 196 after those earnings. We already had a short position in the options markets and puts, but look, there was a near $1 trillion market cap swing in one day yesterday in NVIDIA. Look at the bearish engulfing candlestick patterns that we have on the S&P, on the NASDAQ 100, on a bunch of the Mag 9 stocks. Probably more bearish engulfings on individual stocks in the S&P 500 yesterday than at any time. So another technical indicator, near record high valuations, that there is a lot of downside risk still in the stock market here, driven by this AI bubble. I mean, look at everyone in the past week to 2 weeks that's been talking about the AI CapEx bubble. Well, remember where you heard it first, and all the comparisons that we've made to the tech bubble and the charts that we produced on the CapEx, unsustainable CapEx trends among the Mag 7 that is highly comparable to the tech bubble. People want to say, oh, there's no comparison to tech bubble. It's totally different. But look at some of the excuses that guys like Dan Ives are coming up with for why it's different this time. And he had a tweet this morning that I encourage everyone to look at. I mean, it's completely absurd, the comparisons that he's making, and I don't have time to go into that. But let's look at some real comparisons, like the CapEx unsustainability. And remember where you heard it first. Go back and look at our letters, look at our past presentations, look at the comps that we've made to the tech bubble in 2000. Anyway, let's keep going. Oracle has become the proxy for credit risk, and the primary go-to short position for the AI bubble in the CDS markets. And look at how, just like in the housing bubble, when the credit default swap markets became the preferred place for guys like John Paulson to play the bursting of the housing bubble, guys like Michael Burry. Look at what's going on with credit default risk on Oracle. Now, Oracle used to be one of the biggest free cash flow generating companies in the S&P 500, just consistent, ongoing free cash flow, high free cash flow relative to net income, high growth. It's completely flipped. It's the opposite now. They've taken on a lot of debt. They've become a hyperscaler, and they are the free cash flow forecasts are just abysmal when you look at this company. I don't know what's going on with Larry Ellison, and I'm not trying to criticize him at all, but he's made a big flip, a big switch in the structural, their historic, what has worked for them historically in the software space. It's a big change for this company. Will it pay off? A lot of people are starting to take the other side of this trade. Let's go on to the next. Investors are holding near record low cash. This came from the B of A Global Fund Manager Survey recently. And, Lisa Abramowitz is from Bloomberg. Her comment regarding this is that investors are holding one of the lowest proportions of cash in modern history. The November B of A Global Fund Manager Survey showed cash levels of 3.7% or lower has occurred 20 times since 2002. And on every occasion, stocks fell and treasuries outperformed in the following 1 to 3 months. Consider the clustering of Hindenburg omens that we talked about a couple of 2 weeks, and that which also portended 2 months of very difficult market performance ahead. Not 100% of the time, but very frequently, especially when you have those clusters. Well, this was a technical indicator we had of the market breadth, nothing to do with valuations at all, but primarily market breadth and different extremes with new highs and new lows, weakening breadth and overbought conditions that we're starting from. So these are the setups, technically, structurally, from record valuations where there's a lot of downside risk in the market. And I think a lot of downside risk still ahead. So yeah, markets are bouncing today after that massive bearish engulfing that we had yesterday. But this is not a bounce that I would be buying into. It's a bounce that I would be looking to put on more short positions or liquidate more longs if I were an investor in Mag 7, in the S&P 500 indices, and NASDAQ 100, NVIDIA, and so forth. I do think there is a place you can buy. I think it's precious and critical metals. I think it's the precious and critical metals miners. Now we've seen John Williams from the Fed come on and start to indicate that, yeah, I think we may be looking to cut rates in December, and so the probability of a rate cut now in December, after yesterday and after John Williams came out, I think it was this morning, has flipped to like 65% probability now from less than 50 of a Fed rate cut in December. Is this a reason to be bullish on the stock market? Let's look at all the other times that the Fed was cutting from high valuations and when the market was in trouble, and these were not bullish times. Whether it's in 2007, whether it's in 2001, these are times, or late 2000. These are when the Fed cuts rates, not because when it ignores inflation indicators and is cutting rates from record valuations, these are usually market tops. It's not a time to get excited about the Fed cutting rates, unless you want to get excited about gold, because look at how gold has held up. Look at how silver has held up relative to crypto collapsing here recently. We want to own hard assets. The miners are incredibly cheap. These are the strongest scoring stocks in our large cap model. The large cap miners, we have even better valuations according to our internal modeling, and better growth in our exploration portfolio, along with the larger cap producers that we like and own as well across the firm. But if you want to play the Fed cutting rates, The place to be is in hard assets, in precious and critical metals, and in precious and critical metals miners. That's the long exposure we have with the Crescat Precious Metals Fund and Institutional Commodity Fund. It's our largest theme, our activist metals portfolio. We've also got that as the largest long theme across our macro and long short hedge funds, and so we're hedged. We believe that we're hedged. Nothing's a pure hedge, but we believe we're hedged for this current market environment across the firm, across our funds, and we're hedged on the long side with precious and critical metals. Let's go on to the next. Just highlighting the valuation risks again here. This is the Buffett indicator, market total, U.S. stock market capitalization to GDP, record historic highs for the Buffett indicator. This is highlighting the significant and substantial downside risk today in the equity markets, and this should not be ignored. Let's go on to the next. Elliott Wave's Robert Prechter. He's got this chart. I'm sorry, this is going to be small, but what it's showing is on one axis you've got the S&P Industrials price to book value going back to pre-1929, and on the other side you've got the dividend yield of the S&P 500, and that little box down there in the lower middle part of the graph is a little bit to the left, is showing that the normal range for these two dimensions of valuation going back from 1927 to 1988 was in that very tight valuation range. But since post the 1987 stock market crash, when we've had the Fed put at play, the valuations have exploded, and so we are in higher valuation territory now on two different measures. We just showed you the Buffett indicator. Here's two completely different measures, looking at price to book value and dividend yield, and look up there at the very upper right corner of this graph. So that's October 2025. The highest combination of price to book of high price to book versus low dividend yield, the highest combination on these two dimensions that we've ever had. So this is the risk in the marketplace today from a valuation standpoint. Let's go on to the next. So we've updated this chart, and we need to get a letter out here. We will very soon. Hopefully this we'll have it done this weekend and out before Thanksgiving. But yes, our funds did pull back last month when the gold and gold stocks pulled back at the same time as our short positions went against us in the global macro and long short institutional macro fund. And so we had a pullback across all those funds. The global macro fund had an even bigger pullback than our precious metals fund, but we updated the chart, and we still have 5 of the top 15 performing hedge funds among all 1,400 hedge funds in the Preqin database that have reported their numbers through today, and so why have we maintained this leadership? Well, a lot of other funds, our funds were down last month, but a lot of other funds were down as well. And with crypto coming under pressure now, even more so this month, a lot of those other funds that were ahead of us were crypto funds. Most of the other funds that were ahead of us were crypto-oriented funds, and I believe strongly that our funds are outperforming almost all of the crypto funds month to date. And we have extraordinary alpha month to date now in November in our global macro and our long short funds and our institutional macro funds. All three of those funds are up in a down market month to date. So I think we are positioned well for this current market environment. We haven't seen anything yet in terms of the downside risk that we think is going to play out in favor of our short positions in global macro, long short, institutional macro, with the themes that we've had there, especially the mega cap tech bubble theme that we continue to express primarily through put options, and we've only really just started to see the leadership in the mining space. I think there is many years ahead for precious and critical metals to outperform. Remember all the charts we've shown about the counter cyclicality of gold and gold mining stocks. We have the setup for both sides of that trade ready to play out. This is how we're positioned across the firm. Still early for the miners. The valuations, according to our models, for the mining stocks, just still incredibly low. The growth ahead incredibly high, and there's going to be volatility out there, but this is a market that Crescat has been positioning for a number of years, and it is finally starting to play out in our favor. I think there is much more to go. So we're going to flip to Tavi's presentation now, and then to Quentin's. Go ahead, Trevor. Tee up Tavi's. Let's go.
Hi, everyone. This is Tavi here, recording for another Crescat Live. This is a Thursday morning here in Colorado, on a day that we've seen NVIDIA basically go from a pretty significant earnings release with a lot of excitement driven in the market by its earnings release, and then after we were seeing now the fading of that excitement in the markets, which is really interesting from a macro standpoint, and I think it speaks volumes to what we're seeing in terms of complacency and issues that we're going to talk about in this recording. I'm going to start sharing my screen here so we can move along. This first chart that we're seeing is looking at the VIX index. As you can see here, the VIX has been starting to creep up quite substantially, while we're still seeing the corporate spreads, or the junk spreads, which to me is one of the best ways to measure complacency, remains historically low. It's, I believe, below 3, which is a exceptionally low level. This type of index does not stay at these low numbers for too long. We usually see, especially when VIX or volatility increases in the market, that also tends to be reflected in the junk bond spreads. And I think that it's a matter of time for the blue line to follow the white line. This is my view. And ultimately, I think that's where risk tends to be also express itself in the markets, is through junk bonds, showing signs of being riskier, and people actually spending a premium for the spread between those bonds relative to where the Fed, or I should say where the U.S. Treasury yields are. I think it's also an important point about what's been happening today is the Fed members' hawkishness that we saw over with the Fed minutes. If you think about it, ironically, the further they, the more hawkish they are, they're more likely Fed fund rates are to fall in the near term, because their hawkishness, given the fact that the economy has so many imbalances today, that hawkishness is out of line when, and the market, despite the fact that we have inflation being higher than historical standards, of which would justify hiking rates, believe it or not, the government is almost required to lower rates in order to afford its debt imbalance that it has. And so ultimately, this what we're seeing is almost like a self-fulfilling prophecy for the hard assets. The further market declines, the more it supports lower rates, and the better it is for hard assets. And so this downside volatility we're seeing in the markets right now, to me, is an opportunity. Again, it's just my 2 cents. Let's go to the next chart. What we're also seeing in the technology space, I mean, Bitcoin is also showing that in terms of liquidity. Bitcoin is a great proxy for that when it comes to markets. As you can see here, the small tech or small cap technology companies, and measured by the Russell 2000 Technology Sector Index, are starting to lead the downside versus NASDAQ 100. And that's an important aspect. When you start seeing the small cap companies really lead the way to the downside, it really shows that the frothiness across most investors is starting to capture that risk is getting higher and is going higher, and therefore investors are starting to move away from those positions in small cap companies and so forth, and that's an important driver usually for deterioration in the economy and deterioration in markets overall. So I would expect that this white line is an important leading indicator that we should consider for the blue line, of which the further small caps fall, you would expect that the blue line is also going to follow that as well. So an important point, of which is in line with the expectation that the junk bond spreads should also widen substantially. There's a lot of mixed signals about the economy when it comes to data. One aspect I would point out, it's what's been happening with the consumer discretionary sector of the economy, which has been performing very poorly. I think that's one of the most important things to be aware of. But also on top of it all, this index, which is a freight index, looking at shipments in the US and so forth, is currently at its lowest levels since we've seen during the COVID lockdowns. And what I think it's important about this is this cannot be twisted as a displacement AI theory, of which we're seeing a lot of that in labor markets. Labor markets have been deteriorating as well. And I think a lot of people have been using that as an excuse to say, well, this is driven by AI. It could well be. By the way, I'm not saying it couldn't, it shouldn't or couldn't be, but I also think there's real signs of weakening, issues in the economy that I think we should be aware of, and this is one that you cannot really blame on AI by any means. I mean, if anything, we're seeing efforts towards onshoring, we're seeing efforts towards building the economy. You should not be, seeing this freight index actually declining as much as it has been, and especially to levels like we saw during a COVID lockdown or a global financial crisis when the whole economy was stalling. And I should say not even stalling, but really contracting in a large way. And so I think this is an alarming type of indicator that we should be aware of, and therefore why I'm showing here. Ultimately, as I said before, this is what drives, liquidity. It's what drives, again, the need for central banks to step in, the need for the economy to step in, or the government to step in and start either expanding its monetary base or increasing fiscal stimulus, believe it or not, even more. The remarkable aspect about what we're seeing in the fiscal imbalance specifically is the amount of the deficits we're seeing, and we're not even in a recession, right? I mean, we're still in an economy that supposedly is growing, mostly driven by, again, technology. Other parts of the economy, like I said, consumer discretionary, are clearly not showing the same, strength that we're seeing in those parts of the market. So what is remarkable as well, I keep using the word remarkable, but the PBOC, the Chinese central bank right now, which has been, not a lot of people have been looking at that. I think the prior presentation I did discuss how the PBOC has resumed or initiated again its QE program, the quantitative easing program, which is quite stimulative for their economy. And finally, we're seeing actually the PBOC balance sheet become larger than the Fed, or on the cusp of becoming larger than the Fed. And however, this is a race. At some point, the Fed's balance sheet also needs to grow. We can't be seeing this contraction, in my opinion, of the Fed's balance sheet assets in a sense when you have the economy, potentially needing more support on the Treasury side, demand, which is ultimately potentially going to be driven by the banks and other mechanisms that Scott Bessent and the administration may use. But all this is incredibly important as well, because I do think that eventually the Fed assets needs to be expended in a big way. And this is a race that we should be aware of. Another way to see this is that this contraction in the balance sheet that we're seeing, is it as relevant as money supply? Money supply is a broader calculation, a broader measurement of credit in the economy and money as well. And when you look at a global M2 money supply in trillions of dollars, we're about $114 trillion. In the last 12 months, we saw an increase of about $10.3 trillion, right? And if you think about it, just for interesting aspect here, we've seen a lot of that money go to gold, right? I mean, gold itself has increased its size when it comes to a market cap of gold above ground by about $10 trillion over the last 12 months. And so, if you think about it, the amount of credit created in the economy is, despite the fact that most central banks have been contracting their balance sheets, found its way into hard assets, right? But as one hard asset, there are others that will likely also serve as an alternative for that creation of credit. And my point when I saw this chart was how fascinating is the fact that we're seeing such an aggressive increase in money supply, despite the fact that central bank assets have been contracting as well. How would this increase look like if we actually see a substantial expansion of central bank assets like we saw back in 2020? And you can see that ramp up on money supply in line, mostly driven by central bank assets at that moment. So, what's driving the money supply is lending, is private lending. It's mostly that. I mean, financial institutions lending more than other times. And that's the creation of credit itself that can happen in many ways in the economy, not just by central banks supposedly printing money. Another thing that we're likely to see is this $2,000, tariffs, dividends that are being discussed. And we have to put into perspective of what would that look like. It's incredibly inflationary. It's probably one of the most inflationary things you can do. I think I've said this a few times in the past, but you give money to the lower parts of financially classes of the economy, and you will see them spending. Unfortunately, and I hate to say this, but one of the main reasons why a lot of the folks are in lower classes. I have been there personally as well. I grew up in not in a very privileged side of financially speaking, and I can say that being around that, one of the main issues is that people don't know how to spend money. They don't know how to save. They don't know how to invest, and it's an unfortunate aspect of the financial illiteracy, I guess, that we have globally, and particularly in emerging markets. But when you give money to the lower classes, what you tend to see is that they're going to spend, and that drives inflation. It drives consumption, and to me, this is one thing that to be very much aware of. That money is going to flow right back into the economy, and it's going to be very inflationary. So we need to be aware of that as well. It's another thing that adds to the hard assets case, right? I'm talking about hard assets. One of the things that is also important to look at is any type of commodity or prices relative to or adjusted by CPI. If you look at the consumer price index by the government, which is a very conservative, to say in a nice way, a measurement of inflation itself, And when we do that calculation, you can see here that silver adjusted for CPI has just started to break out from a 46-year or a 45-year or so resistance that we've seen. The prior time that we saw this resistance was back in during the peak of the market in 2011, and the other one was in 1980. And now we're breaking out from that level. But more importantly, if you go back to the 1980 level, we're still 77% lower, almost 80% lower than we were back then. And so this, gives you some sense of how potentially undervalued silver prices are adjusted for CPI. And again, that's a big assumption because it's assuming essentially that CPI is inflation. And we know that most likely that's not the case, which means silver prices adjusted for real inflation is actually lower. So again, it's one of the reasons why I view silver as being one of the cheapest, not only metals on earth, but also one of the cheapest, or maybe the cheapest of all hard assets as well. Lots of questions in regards to, are we in a bubble for gold miners and all sorts of things? And in the day like today, where there's a sell-off on those assets, and I don't know how Friday today, in this case, when this is being aired, market is trading, but I don't really care. What I think it's important is this is a good measurement when you look at a gold and gold miners relative to total global assets. It's a good way to measure where we are in the cycle. Usually when you have a cycle in the gold market, now a real cycle, you go to levels like we saw in the past, between 20 and 30% of total global assets start to become part of the gold and gold miner space. And we're so far away from that. In fact, today's sell-off might be lowering this even further, but we're about 4% today. And if you ask me, I think we're going to go substantially higher over the years, multiples higher over the years in this measurement. And so I'm really excited about being part of this as an investor. Another thing to consider, sometimes, one of the questions I used to get the most, and back in, not too long ago, was how can you have a bullish view on commodities if you have a negative view on China? And look, it's not that I'm positive on China, but I certainly think that the time to be bearish on China was years ago, not today, given the fact that, look, this chart is a great example of that. Look at it, Chinese real estate investments is at keeps going lower. It's not like it's falling just this year. It's been falling, it's been a negative trend for a while. And if anything, you should expect this to start bouncing at some point. And that fallacy that China had a control over the commodities markets is a fallacy. And when we see the G7 economies carrying the torch when it comes to demand and revitalizing their manufacturing capabilities and AI, data centers, and construction, and all we're seeing in those countries is really what's carrying on the commodities demand. But what if the Chinese demand actually comes back as well? And that's the whole point. We're seeing a bull market in commodities where the Chinese demand has actually sit on the sidelines, and in fact has been actually driving the downside of that market. And so I think this can be a very important demand factor that a lot of people are not considering, that could change things quite significantly. In line with that, copper, which is China's, still has a very important demand, driven side of it, is the copper market. And when you look at the chart of copper itself, especially in a day like today where market is falling, and you look at copper prices, they're not leading to the downside. Why? Because I think the market's starting to figure out there's a shortage in the copper market from a supply standpoint. And I find it fascinating that copper continues to trade around this sort of perfect environment here when it comes to resistance. When it breaks this resistance, I would suspect that this is going to be leading to a very large appreciation in price, and potentially much higher than a 5 handle. Maybe we go, at a few $100s here in this chart. That could be really, really interesting for those that are bullish in the copper space. This is just my opinion. And I love charts that look like this, where you have this energy being saved, and it's almost like big consolidation, and then all of a sudden you see a big release of that energy in the markets. Another way to see this as well is on the dollar side of it. Now we've seen the dollar actually been digesting a big move we saw recently, and one of the places that has been actually been driving the most of the DXY index has been the yen, and I do believe that Japanese yen is mostly very undervalued, much especially when you look at the interest rate differential between U.S. and Japan. U.S. interest rates have been falling more than Japanese rates have been, in some cases, rising, especially long term. And what you find is that eventually will be a driver of their currency. But in this chart, I'm looking at the Australian dollar, not the Japanese yen. And the reason I'm looking at Australian dollars is because it's a commodity-driven economy. And I find this a very interesting setup as well, just like other things like the Canadian dollar that I've talked about in the past, which has been taking a while for that to manifest itself in the markets. And look, I have patience. I'm not here, to get things right in every turn. And I think that we're starting to see after this digestion in the dollar, as we see the market following the need for further dovishness in the Fed and other central banks. Ultimately, that should drive the dollar, in a much weaker environment. And as we see that, the Australian dollar can actually make a major breakout here, or mark a major breakout if it does go above these levels, that we're not too far from. And if we do see that, I think a lot of people are going to start seeing the thesis. But a lot of times you want to be ahead of those changes, and this is what I'm trying to accomplish here by showing this. In line with the commodities is what's been happening with oil. I've said it before. I think oil is starting to become one of the main opportunities in the macro side. Oil adjusted for money supply is historically cheap. It's one of the lowest levels we've seen in history over the last 30 years or so, 34 years. And I think this is not just a great way to hedge mining exposure, but also, when you're looking for, undervalued assets out there, I think a lot of times we struggle finding those ideas, those opportunities, but there's always those opportunities available. And I think a lot of people are overlooking the chance that, geopolitically things can change quite dramatically. And I do think that oil prices can be a big driver even of inflation here, as we see the Fed being forced to lower rates and stimulus checks, if you will, with the dividend tariffs, or the tariff dividends, and other things like expanding the balance sheet that should at some point drive oil prices as well. Not only that, but also what we're seeing in the Permian, with number of rigs declining, contracting over 30% in the last 2 years. Those are real changes in potential changes in supply that we could see here in the near future. I made this chart the other day, and I think it's also very valid to especially what we're seeing today with NVIDIA, going from being up now to being down, and it's still a $4.6 trillion market cap. It's if you consider this about 3 times the size of the entire energy sector in the S&P 500, the energy sector is sitting at around $1.2 trillion. And then when you look at the free cash flow that the entire sector generates relative to NVIDIA, it's about 20% more than what NVIDIA creates. So, a lot of people say, well, but NVIDIA is growing. Yeah, look, technology is great. Advancements are great. There's a lot of growth there. But I should say something needs to power that whole infrastructure, and the energy sector remains incredibly undervalued relative to its relevance in that market as well. The other chart that I think it's probably one of the most important ones that I've done recently is this one, because people see the gold miners moving and they get excited about it, but the move already happened. Not that I don't believe it's going to happen even further, but it's funny how people get bullish after validation, and then they see the copper miners start moving. They're like, yeah, that makes sense. But then when you show them the energy equities chart, they're like, yeah, I don't see it. fascinating, and if you look at all these charts, if you look at the three panels of this chart specifically, they kind of look like, very similar charts, right? I mean, they all went through a bullish market in the early 2000s. They all kind of bottom around the same time, although the gold miners, as you can see, actually bottom first back in 2015, 2016, and then bottom again back in 2020. But then the oil markets have been the delayed ones, sort of, took a while to start really bottoming until the COVID recession. And then, and now, after seeing a big move in that whole industry, from trading at very, very low prices, and now we're seeing the resilience of the market, despite oil prices actually falling substantially here recently. And I think that's just smart money starting to accumulate these assets in a big way. I think it's a matter of time to see a major breakout in energy. And so I am laser focused on this because I do like this sector quite a lot. Another aspect that we're seeing a big change here is emerging markets. There are days that markets are falling 1%, 2%, 3% here in the equity markets in the US. And when you look at emerging markets, they're actually outperforming the US stocks. And again, it's another sign that we're seeing smart money, in my view, accumulating these assets over time. We saw even Gunlock now talk about how he likes, local currency denominated emerging market bonds. And I've been very vocal as well about emerging markets as an investment opportunity, especially Latin America. We'll touch on that in a minute, but I think there's lots of positive changes happening in this environment. Also, touching about Brazil specifically, we've seen a change that's significant. It's not a small amount. It's a few $1 billion of increase in gold reserves in Brazil. You can see that we haven't seen throughout history many of those. And so emerging markets are the ones actually acquiring gold, in here. We don't know how much is being purchased of gold and accumulated over the last few months and years. That is unofficial, but what has been officially announced, these are not small amounts that we should be aware of. In fact, if you look what's been happening with the currency markets, it's also important to see that the Brazilian real has been the second best performing currency across all major currencies, outperforming the Swiss franc, believe it or not, outperforming Bitcoin, believe it or not. And I'm not here to say this is a hard asset type of idea, or this is not going to be, ultra dilutive over the years. All I'm saying is, things have gotten so extreme that some of these emerging market currencies are starting to outperform even the dollar. So yes, I think that's a real trend. I think when you combine an economy like the US that needs to lower rates at almost all costs and needs to weaken its currency relative to other fiat currencies, therefore why you're seeing these performances across the board, not just the Brazilian real, but especially like the Mexican peso and others like the Swiss, the South African rand and others that are part of a more, I guess, riskier aspect of the market that is still, despite the fact that being risky, is still appreciating relative to the dollar. These are policies that eventually is away from emerging markets, usually is a stronger dollar and higher rates in the US. If we're going to go and take those two out of the equation here, at least eliminate that risk, or I should say, reduce that risk in a big way. And that's, I think, what it creates a big opportunity for these assets. I think this is it for my presentation. I touched on a lot of things. I hope you enjoyed this presentation, and I'll leave it for Quentin to continue this discussion.
Happy Friday, everyone. This is Quentin. I'm actually traveling once again. I'm in my favorite country, Bolivia. I'm doing quite a bit of work down here. The amount of work we're doing in Bolivia right now is just jaw-dropping. It's been an absolute wonderful experience as a geologist to see all the things that we're seeing down here. And I thought, rather than just jump right into updates as I normally do, I thought, you know what, I'm going to show people what we're doing down here as part of San Cristobal. San Cristobal, of course, is one of Crescat's mining investments. It's a private company. I am CEO of the company and director. In fact, I founded the company and negotiated the purchase of San Cristobal from Sumitomo Corporation about 3 years ago. And since that time, we've really done a lot of work. We've taken a mine that had at that time a perceived limited mine life, limited future, and we've turned it around completely. And I want to kind of go through that, show people how this whole business of mining kind of works. Maybe this will, if anything, just be interesting for folks. Why don't you head to the next slide? So one of the best parts of coming to Bolivia is getting to see geology up and up close. And one of the things, every time we fly in our plane from La Paz down to the mine, I get to see from the air, I get to see the geology of the region. And here you can see a whole series of very young volcanoes. In fact, some of these are dormant volcanoes that kind of pop up out of the Altiplano. The Altiplano is a very broad, flat region that kind of spans western Bolivia. It goes up into Peru a bit, even into the northernmost part of Chile. And it's a remarkable place because it's highly elevated surface and it's generally flat. About 14,000 feet. It's almost like a tabletop in many places. But then it's punctuated by these volcanoes that pop up. And here you can see a line of volcanoes. You kind of hold your mouth just right. You can see they're lined up in almost a straight line there. There's 4 of them. There's one here in the foreground. There's one with a bright white spot, little white spot, and then one way off in the distance. These volcanoes tend to come up along major crustal structures in this region, and they tend to form in lines like this. But it's just amazing to see geology, active geology, I'll call it. These volcanoes are brand new. They're no more than a couple million years old. And each one of these is probably forming a new ore body at depth. It's cool as can be. Let's go to the next slide. Here's a view of the Uni salt flats, salt lakes, if you will. So they're called salars. Salars are salt lakes. And Uni is the biggest one. It's really probably the biggest in the world, especially for lithium. It covers much of the southwest corner of Bolivia. It's many hundreds of square kilometers in surface area. And you can see here, other than a little patch of residual water there on the left-hand side, this thing is a broad expanse of salts that have crystallized as waters have evaporated away. And, everybody knows this region is very dry, very dry. So the evaporation rate far exceeds the level of moisture that falls in form of precipitation. Now, that's said, I think earlier this year, it was, you got to bear in mind that the seasons are flipped down here, but, during the summer months, which was February and March, a lot of rain this year in Bolivia. In fact, this lake was a lake for a brief period. If I'd taken a picture, even 4 or 5 months ago, it would have been full of water, but now it's back to a broad salt flat. It's pretty cool to see from the air. Let's go to the next slide. And here's a view of La Paz. This is coming into La Paz. The airport is up there in El Alto, which is the flat part on the left-hand side. La Paz is a unique city. It's really divided into 2 portions. El Alto, which is the high plateau, is part of the Altiplano. And, it's that flat plain that I talked about. And you can see that flat, expansive city on the left-hand side. All of those little speckles are houses or office buildings or whatever. They go on for miles and miles and miles. And that green area on the far left, that's the airport. That's the airport that John F. Kennedy administration helped build way back in the early 1960s. But then the better part of La Paz, meaning the bigger part, I guess, is down on the right-hand side here. So you can see all the big office buildings, a lot of government buildings down in there. And that part of the city is built down in that canyon. And it's just remarkable because the difference in elevation from El Alto down to the bottom is about 3,500 feet. So it's not quite as big as the Grand Canyon, but it's it's about 60% of the Grand Canyon, I think, something like that. I just can't think of anywhere on Earth that you can see a city that's built in a canyon like that. It's a very unique setting. It's absolutely gorgeous. Go to the next slide, please. Now, I usually spend a day or two in La Paz to kind of get acclimated and also meet with our office staff there. We have our main office in La Paz. We have about 80 people working there. And, I always enjoy catching up with everyone and finding out the interesting things that go on. But the next part of my trip is always my favorite, I got to say, is getting down to the mine. And as we fly down to the mine, we actually go straight back over Uyuni Salt Flat. And in this case, we flew over one of the lithium brine operations that's not too far from San Cristobal. It's about 20 kilometers to the north of us, but it is in the Uyuni Salt Flat, and you can see the evaporation ponds here. This thing was largely underwater a few months ago. It was really interesting. I looked at this area, flying out in August, and I thought, oh my gosh, I'm not sure how they're going to reestablish production and stuff. But as you can see, the water's evaporated away, and I think they're normalizing operations again. You can start to see some of the lithium salts in stockpile over there on the left-hand side of the image. Anyway, these lithium operations are very, very large scale operations. They basically have a grid of bore fields that go out for miles, and that saline water is pumped into these evaporation ponds, and they basically evaporate away the water in stages, and then they kind of capture those lithium salts at a certain point in the evaporation cycle, and then they make concentrated lithium brines, from which they can make lithium carbonates, which is actually on shore. It's a couple of kilometers to the south from here, but very amazing operations. This is a mine, believe it or not. That is a lithium mine. Let's go to the next slide. And this is our mine. This is San Cristobal. This is the pit. We have a zinc, lead, silver mine. And I'm going to turn that around because we now have more revenue in silver than we do the other two metals. So we're really a silver, zinc, lead mine at this stage, largely driven by the silver price, but also a larger production of silver. One of the things we focus on since we acquired this from Sumitomo Corporation was ramping up our silver recovery and focusing on achieving as high a recovery as possible. So we're optimizing in every way, shape, and form. We're optimizing our silver production. Right now, we're doing about 17 or 18 million ounces per year. We also produce around 180,000 tons of zinc metal in concentrates per year and about 50 or 60,000 tons of lead metal in concentrates. It's a big mine. It's an open pit. It's a conventional open pit operation. It's been producing now for not quite 20, it's about 18 years, not quite 18, I think 17 and a half years since it first went into production. But you can see it's a broad, relatively shallow pit. It's not flat on the bottom, but the ore body is more of a horizontal nature than it is a vertical ore body. So basically, we're mining this thing progressively to the north, which is off in the distance. And one of the big things we've done here recently, we found a huge continuation of the ore body underneath that broad hill that you see on the north end of the pit. That dome, Haiula Dome, is not going to be with us much longer. We're finding ore under that. And I'll talk more about that here in just a second. Let's go to the next slide. Here's a little bit closer image of the pit. I put this in because in this image, you can see some of the vehicles. Those little dark objects, those are haul trucks, and each one of those holds about 240 tons of rock. So those are massive trucks, and it gives you a sense of scale of the operation that we're dealing with. There's two blast hole rigs, drill rigs on a bench there right below the Haiula Dome. Those are basically drilling little short holes that they use for putting explosives in to blast the next round. And we're starting to lay that high wall, that dome back. And that over the next 3 or 4 years is going to disappear. Why? Because there's a bunch of ore underneath that big hill. All right, go to the next slide. One of the things I like to do is explore. And when we acquired the asset, we set about exploring at every single level. We have 13 rigs currently operating. They're all diamond core rigs. About 9 of them are here at the mine, and then 4 of them are at another project nearby. But you can see here we have 3 rigs you can see visible. There's actually one behind me. And actually, come to think of it, there's one over there on the right-hand side. So there's really 4 rigs visible here. And excuse me, what they're doing is they're drilling angle holes. We're looking southward this time. So we're basically on the side of the Hyula Dome, which is on the left-hand side of the image. And we're looking southward, and we're drilling holes underneath that dome to see what's down there. And to date, we have found an extraordinary amount of ore underneath that hill. We're very excited about this because it means this mine could have a much, much longer future. We think that with the continuation of drilling, we might see an extension of sulfide mine life here out into the 2040s, maybe even longer. We don't know, but it's a very exciting time. It's kind of a pivotal time in the history of the mine. I think, just 2 or 3 years ago, there was a very dim view amongst the workers here and the community and the government that, oh, gee, San Cristobal's almost done. It's not going to be employing people like it has. Well, we've turned that around. Okay, we've spent money and a lot of it, and we've been finding more ore, but that means we have a lot of future ahead of us. So it's a very exciting time. Let's go to the next slide. And then down here by the mill, this is where our bunkhouses are. Llamas. We have, I should say llamas. They're actually pronounced llamas. Got lots of llamas, and they love to curl up in the night and sleep amongst the weeds around the roads and stuff. You got to be very careful driving around, or you don't want to hit any of these really cute animals. But we have llamas all over the place. It's an unbelievable sight to walk out of your door and see llamas peeking at you through the darkness. Let's go to the next slide. While I was down here in Bolivia, or while I've been down here in Bolivia, there was an event up in Colorado, and I really wish I could have been there. We have a number of students that we sponsor to go to the Colorado School of Mines. One of the big endeavors that I have is to train the next generation of mining professionals. And we currently have 10 students at the Colorado School of Mines getting advanced degrees in geology, engineering, metallurgy. And they had their international day. And I put this slide in because I felt bad because I had to miss it because I had to come to Bolivia. It was quite ironic. But they did a great job. I think they won 3rd place in their cook-off, International Day cook-off. So really fun group of kids. Let's go to the next slide. All right, now I'm going to talk about a new discovery that we made. This cement pad that you see here, this is actually a placard that was left on the ground where the first drill hole, SFD 001, was drilled on a discovery that we call Isidorito. Isidorito was discovered in 2019, right before COVID, and the discovery was a very remarkable story where the geologists here at San Cristobal at the mine had a concept about a target at this area, remote area, about 40 kilometers from the mine, and he wanted to test it. And he managed to squeak in a few holes at the end of 2019, of which some hit some very interesting mineralization. Well, that program had to shut down because of COVID. COVID kind of shut all of the operations down. There was no ability to travel from between 2 communities and so forth. So the project sat idle all the way through our acquisition of the asset. And once we picked this up, we resumed exploration work. And to date, we've drilled nearly, I think, over 300 holes, probably about 315, 320 drill holes. And we are in the process of drilling out this remarkable deposit. Let's go to the next slide. I think a couple of years ago, I showed an image from a vantage like this with about 9 rigs down there in that white area, that flat area, drilling away. We currently have 4 rigs, and they're kind of hard to see, but they're down there. Little black specks here and there. You can see them. We've expanded the grid that we've drilled down there in the flats. We've also stepped up onto the hills over here on to the right-hand side of the image, and we're continuing to expand this remarkable deposit. I can't speak too much about this, but I would say that this deposit deposit. We're a private company. We don't share a lot of details, but this is probably one of the most remarkable silver discoveries made in the silver mining industry in a long, long time, and we're quite proud of the progress we made here. How fast might it become a mine? Well, it's probably going to take about 2 or 3 or 4 years, something like that. But we are trying to move it forward relatively quickly. And one of the great things that's happened here in Bolivia is with the recent election, I think we're seeing a kind of a ground shift, a groundswell in the direction of increased investment, international investment in building new things like this, new mines in Bolivia. And so we're looking forward to working with the new government to try to advance things more quickly. So it's kind of a new day. It's very exciting. Let's go to the next slide. Here's some drill core out of this project. Doesn't look like much. In fact, it looks kind of like road gravel. It's rather ugly in my view, but nonetheless, it contains appreciable amounts of silver. In places, this stuff runs hundreds of grams, if not thousands of grams per ton silver. It's fairly homogeneous material. We think we can mine this thing via open pit. It's a relatively soft rock. I think it'll be easy to mill. And even with a modest scale operation here, I think we could be in a position where we could produce maybe 10 to 20 million ounces of additional silver beyond what we're already producing over at San Cristobal right now. So going back to the point I made about increased international investment, one of the big things we're working on right now is expanding San Cristobal in every way we can. So this discovery is one example of that. We have another project, I should say the sulfide expansion that I showed you at the beginning was another, we're trying to extend the sulfide mine life around the pit. But then we have another project we call the Oxide Silver Project. And the Oxide Silver Project is already, has a resource base of around 200 million ounces and is likely, it's going to be the largest scale oxide silver plant in the world. It will be able to produce around 13 million ounces per year. So, long story short, between the sulfide expansion, the Oxide Silver Project, and this new discovery here, I think SCM is going to be on track to be one of the biggest. It's not going to be the biggest, but it'll be one of the biggest silver producers in the world within 5 or 6 years. So we're very excited where this is heading. Go to the next one, please. And in this region, this is nearby neighboring project. There's a lot of history. This region, as many people know, Potosi was mined by the Spanish, founded in the 1530s. And it was mined, it's really been continuously mined up through the modern day. This isn't Potosi, but this is another project, looks a lot like Potosi in some regards. You can see the ancient Spanish ruins here. You can see the big altered mountain in the background. And there's even some, scratching some old mine workings along the hill in the background there. Beautiful country. It's really unique to see a place where you kind of combine, these world-class ore bodies with this amazing history, and see, how early people came into the region and exploited these world-class silver deposits. I think Bolivia is, with the political shift, I think we're going to see Bolivia open up and become once again one of the big silver jurisdictions on earth. It's a great thing to see. Go to the next slide, please. Here's just a shot of the ancient, I think it's probably from the 1500s or early 1600s or somewhere in that time frame, churches. It's fallen down, but I think this was a Jesuit church at one point. Let's go to the next slide. Skip one there. Go back just one. There you go. This was kind of cool. This is one of the few remaining intact houses of the Spanish, the colonial era. And I thought this was just, it's cool as heck, because it shows what they look like with the roof on. You can see they would have had a wooden door. That door is about 4.5 feet tall, by the way. And then you can see a thatched roof. It's made with grass that grows here. And the grass is a very sharp, spiky grass that it's kind of like spinifex grass in Australia or something. But It makes great thatch and keeps the rain out because it's kind of got an oily, resinous quality to it. But this is what the miners back in the 1600s would have lived in. Pretty cool. Let's go to the next slide. And as you can see here, there's nothing geologists like better than roof time, meaning looking at maps on the roof of a SUV. Here's our team. We got a mix here. We got a mix of Bolivian geologists as well as some of our expat team that comes down and works alongside them. What are we doing? Well, all of those projects I talked about earlier. These are the guys that are responsible for drilling out the additional sulfide deposits. They're drilling our new discovery, and they're also looking around at new opportunities as well. And we're always on the hunt. So we've had some fun over the past couple of days. And in fact, they just got in about 2 hours ago from having a great trip in the field. Go to the next slide. We actually went to a neighboring mine. This is a very small scale mine. It's an underground mine. But I thought it was quite unique. It's kind of an interesting operation because this tunnel that you see in front of us is actually dates back to the colonial period. It was dug by the Spanish, and it was dug to dewater the mountains in the background there. All right, so they put this tunnel in to basically drain the water out of the veins that reside in that hill in the background. And yes, it's a long way. It's a very, very long tunnel. But it's amazing that they spent 10 years back in the 1600s. They spent 10 years digging this thing by hand. They had no explosives, no nothing. They went in there and they basically made a tunnel that even an engineer today would be envious of. So quite remarkable. You can see a lot of the equipment they have today, air compressors and things like that, and then some timbers there in the foreground. All right, go to the next slide. Here's how they bring the ore out of the mine. They have little buggies. Each one of these mine cars is strapped on the back of a three-wheeled bike. They're electric, interestingly. And when they came out of the adit there, I couldn't even hear them. Just about missed it taking a shot at the guy, but he passed by and he has a load of probably about just at 1 ton of ore. They tend to focus on mining high grade here, so these are high grade veins that they're going after, and the material can be quite rich. So that bucket there probably has $2,000-3,000 worth of metal hiding in it. Let's go to the next slide. And as you enter the mine, of course, you got to pay tribute to LTO. LTO is obviously the overseer of the underworld, and you got to pay tribute. You can't go in a mine without leaving some coca leaves. So this is the little alcove where there's a ceremonial place to leave tributes, and it can be coca leaves, it can be money, it can be beer, it can be a lot of cigarettes, whatever works. Anyway, you have to leave something before you pass by. Let's go to the next slide. Here's what the mine looks like inside. So it's hard to get pictures inside a mine, but this is basically one of the old hand-dug adits or drifts. And I just thought it was a cool shot because it's actually elevated above the main mine floor. But can you imagine digging that thing by hand without explosives? It's just kind of mind-boggling to think of what people had to go through. Yes, they probably used slaves at that time, but the work that is involved in mining something like that with crude steel tools is just hard to believe. Let's go to the next slide. And as we got close to the working face, I looked down and I thought, that's interesting. Let's see, 1, 2, 3, 4 sticks of dynamite, and we got a cigarette lighter, pack of cigarettes, bottle of probably, I'm going to guess, gin, and a few coca leaves in a little baggie there. I guess it makes sense. I guess it does make sense to leave you don't want to lose your cigarette lighter, so you might as well leave it with the dynamite. But I thought that was rather funny. Anyway, interesting sight. Let's go to the next slide. And this is what they're mining. This is a chunk of high-grade galena. So the bright, shiny stuff, that's lead sulfide, which is galena. There's a bit of sphalerite in there too, which is kind of the darker black stuff, which is zinc sulfide. Excuse me. And then there's some fine grain patches in there of kind of black stuff, and that's the silver minerals. All right. So this is, again, silver, lead, zinc like we have. A little bit different form though. This forms in veins as opposed to a big disseminated deposit like we have at San Cristobal. But anyway, gives you a little background about mining in Bolivia. I see Bolivia as a new day. I see the work that we're doing here going to pay off in spades. It's going to keep a lot of people employed for a long time. We have a lot of good reason to invest a lot of new capital into the operation. And we have a lot of projects that are going to just make this an exciting few years. Let's go to the next slide. Now I got update dates, so we're going to move on. All right. I got to apologize beforehand because I got in about 2 hours ago and I had to literally slam some slides together. So I don't have as many as I normally do, and they're probably not as detailed as I generally like. But these are companies that have put out news in the past couple of weeks, and I wanted to touch on them. And one is Altamira. Altamira is up in Brazil. Altamira is exploring the Cajueiro project, Cajueiro district. And over the past couple of years, they've really unmasked this district and shown the large-scale potential. You can see on the map over here in the upper right all the different targets they have across this. We know about Maria Bonita. That's where they've been drilling some deep holes and hitting very large volumes of low-grade but significant gold mineralization in the porphyry. They already have a resource at Cajueiro Central, which is in the white box in the middle. But more recently, they've been testing some new targets, and one of them is this Morro Verde, which is one of the blue boxes, the rightmost blue box on the top. There are two porphyries there that they found, and over here in the lower left, you can see a close-up image of the drilling that they've done to date. This is really interesting because the porphyry has the same composition and texture as Maria Bonita and other porphyries across here. So again, the thesis here is that all of these porphyries that are clustered around this district are derived off of the same magnetic source at depth, and they're all kind of poking their nose up, and wherever they do, they tend to form gold mineralization. And we're seeing that now in some drill holes. So this is early stage exploration, but this week they hit a pretty handsome interval. It was 8 meters of 3.5 gram gold in porphyry mineralization here at Morro Verde. Now, you know, it's not a huge long interval, and this is just the first hole in this target area. But to see high grades like that is very encouraging so early on. Bear in mind, this is a very short drill hole. It's only like, 10, 20, 30, 40, 50, 60 meters deep, I think. So they hit the good stuff. And in my view, this merits a lot more work. Now, I think they have 2 rigs operating right now. And they're also drilling some deep holes. I think Maria Bonita and another target. I can't remember which one. Maybe it's Tavares. But they're starting to see, they showed some photos in the news release saying they're seeing some interesting mineralization. So lots of news to come out of this company. Let's go to the next slide. Let's see, here we got Goliath. Goliath is going to have a lot of updates, guys, a lot of updates, because they still have 80 holes in the lab. And many of those holes, in fact, over 3/4 of them, have intervals of visible gold. So we should expect a lot of really good news out of the company. They're doing a good job here lately, getting, news releases where they have maybe 4 or 5 or 6 holes in a news release, as the labs are backed up. Yes, we all know this. But they're producing a pretty steady stream of news, which I think is very good. And in this case, they have a nice intercept over here, which is, it's kind of hard to understand exactly where this lies, but it's basically in the northwest part of the Bonanza zone where we have a 10.25 gram per ton gold over 7 meters. And that's within 5.2 grams over 15 meters. It basically shows that the Bonanza zone is white, open for expansion. And, all of this data that's coming back is really going to build a picture where I think the company should be getting close to being able to say something about, the size and scale of the deposit at some point. But it's exciting. It's nice to see a nice steady stream of news like this. You can read a lot of the other intercepts in the little white boxes there. All of them are very respectable and I think are strongly economic, especially with these kind of widths. So good on them. Let's go to the next slide. Sitka has had just a steady stream of news. And in this particular case, the news up through, say, I think 2 weeks ago was all about Rosgobble, which is one of the many intrusives they have across the property. Rosgobble, great target, looks fantastic. But this news release is about a new target. It's part of what they call the Pulkeman contact target. And it's basically mineralization that's out into the sedimentary rock. So it's kind of interesting. It's a little bit different beast. There is an intrusive very nearby this. It's a little bit out of the section. But you can see in this drill hole, number 113, that there's about 119 meters of just over a gram per ton gold in the sediments. And it's way up at the top of the hole. Now, this is, again, an early stage discovery, but I think they have yet another deposit that is starting to take shape here. And why do I say that? Well, let's look at the next slide. Here you can see the gold in soil anomaly at Pokemon contact. And it's huge. I mean, it is absolutely enormous. So now we know that there's mineralization out into the sedimentary rocks, but in the background there, you can see a very faint outline of the reduced intrusive. It's kind of irregular shaped blob. It looks like a ghost almost. But look at all those drill holes they have yet to come back. All of those holes have appreciable, gold, visible gold in veining, as noted by the little gold star. So I think we're going to see a lot more news out of this one. And in fact, I do think this is a new discovery. It's quite exciting, especially given the scale here, 1 kilometer by 1.5 kilometers. Absolutely insane. All right, let's go to the next slide. Elora. Okay, Elora's been doing their starter pit infill drilling, and they've had some really strong results. And this week is no different. Both holes, DSB 92 and 91, both had nice long intervals. Look, they focus on silver and tin in the headline, which is fine. But I'm going to touch on the fact that DSB 92 actually hit 238.5 meters, grading 1.77% zinc and 0.57% lead. There's also about, I think, 10 or 12 grams gold in that interval. 10 or 12 grams silver in that interval, not gold. And there's some subunits or sub-intervals that have higher grade silver. Now, not too many companies will jump up and down and talk about zinc and lead, but I like to because we have a lot of zinc and lead here at San Cristobal. And one thing I can easily say is those kind of grades, 1.77% zinc, 0.57% lead, that's easily within the ranges of those metals that we see in our pit here. So good on them. I think this is, they're making good progress, and I hope to see this infill drilling completed in the not too distant future so that they can put a resource around that starter pit that they plan to build the initial mine. Good progress, lots to look forward to. Let's go to the next slide. Okay, Tectonic announced basically the closing of their program. They did get a lot done this year, which is good. Tectonic, has gone out and drilled the past 2 years, albeit limited programs. But this year, given they had better, started earlier and had better financing in hand, they were able to get out and drill 125 drill holes for a total of 18,372 meters. It's a lot more than they have in past years. This news release here basically talks about completion of that program here recently. It did have a video. I watched it, but the photos of core and stuff weren't necessarily like explicit, like you can sit there and study them as a geologist would like to. But it does at least capture what they did in the program, and I think people should look at that. But notice at the bottom there, they say the virtual drill core shack part 2, where they hope to put a virtual, like a pictorial core shack out there in the internet for people to look at. I think is coming up fairly soon. I haven't seen it issued just yet, but hopefully in the not too distant future. Let's go to the next slide. And in summary, what they did this year, it kind of is shown on this map. So look, this is just a snapshot out of their summary of what they did this year. And this is the phase 2. They did 2 phases of drilling this year. So they had phase 1 and phase 2. This portion, which is the one they just completed, was 10,654 meters. And you can see most of the meters were in Chicken Mountain. So basically what it looks like they must have done is spent most of the drilling in phase 2 to expand and infill Chicken Mountain. Hopefully we see a picture develop there and get a sense of scale, size of the gold system. But they did have some holes that they followed up at Alpha Bull, which is a good sign in my view. Even though we don't have assays yet for these darn things, the fact that they went back into Alpha Bull and drilled a little bit more must have mean they're seeing stuff they like. Now, earlier in the year, they drilled, other targets like Golden Apex, Black Creek, and even way up north there, Gem. All of these, I got to point out, all of this stuff is a weighted assay. Okay, so basically, we don't have assays yet. Labs are backed up. I think these guys were scrambling to get out of the field, get the drilling done, and get out of the field. So, we're just going to have to sit on our hands for a bit, but hopefully we see a good steady stream of news out of the company over the next few months. All right, go to the next slide. All right, Red Canyon drilled a second round of drilling at this Kendall project. This is up by Terrace in British Columbia. It's not quite Golden Triangle. It's a little bit to the south, but it's kind of the same general geology. Now, that said, this porphyry that they found here is a little bit different age. I think this one is a bit older than the porphyries that a bit younger than the porphyries we see further to the north. What does that mean? Don't know exactly, but it is a big porphyry system, and the holes they drilled last year all hit very long intervals of porphyry stockwork veining with low grade, meaning 0.1, 0.2% copper and 0.1, 0.2 gram gold, I believe it was. Well, they came back in this year and they targeted the area that you see in the little white dashed line, and that's the Kendall Ridge drill program. That was 2025. Don't have assays yet. They drilled 2,548 meters in 5 drill holes. We got to see what those hit. But one of the comments they make in this large volume of text over here on the left-hand side is they basically feel that the alteration that they saw in the drilling this year and combined with what they saw in the drilling last year points to the likelihood that the core, the guts of the system are perhaps just to the east, so to the right of the white dash ovoid thing, and a bit to the south of the white polygon there. So basically in that little blue area, they think is the core target area. Okay, now they didn't get a drill hole in there, but they're kind of forecasting to the reader, the investors, that that's what they think. They think they need to come back here and drill in that area next year. How many holes does it take to find a porphyry? Well, I've talked to smart guys like Sergei Dyaikov, and his comment is usually it's about 2 dozen. So how many do we have here? I think we have all of 8 or 9 holes. I think so. We'll get there. We'll get there. I think there's going to be a discovery made given the scale of this thing. Let's go to the next slide. Let's see. Newfound has had a pretty steady stream of news, and they are doing drilling that's oriented for fleshing out, their mine plan, their production planning around these high-grade deposits. In this K2 area, which is one of the many deposits they have along the Appleton Fault Corridor, is way up at the north of this train. So over on the left-hand side, you can see the broad scale plan view map. So in that little black box up at the north end, this K2 deposit resides. And that's where most of these drill intercepts that have come in are reported here. So you can see 18 meters of 4.17 grams and 10.35 meters of 3.5 grams. I don't need to read them all, but you can see very strong intercepts. This is good. This is good. This is the detailed work that needs to happen so that this pit can be developed. but you can see it's all quite shallow mineralization. All right, let's go to the next slide. All right, a company I haven't really gone through in detail yet, but we are recently invested is Norsemont, and we did tweet about this when they announced the commencement of their drill program. Chocalimpi is down in northern Chile. It's a very large alteration system, as you can see over here in the image on the right. What is it? Well, it's a high sulfidation system is what it is. So basically it's an epithermal system that was generated by fluids coming off of none other than a porphyry at depth. So there's probably a porphyry down there somewhere. Now, is that what the company's chasing? No. What they're doing is they're going to drill out a lot of the remnant of ore and likely extensions of ore bodies that was left here from the previous operator. Okay, this mine kind of shut down prematurely, had a lot of reserves left, a lot of expansion potential. And the crew here, I've gone through their drill program with them a couple of times. I think they have a very good, very strong sense of where to focus, and they're focused on these hydrothermal breccias in red. And they're going to see if they can't find the high grade that's going to be necessary to kind of rebuild the case for building a mine here again. But to give you a sense of scale, this thing's already produced, I think, on the order of a couple of million ounces. What kind of size target? Well, with luck, it could be many millions of ounces more. This is the kind of story I like. It's a brownfield story because it was an existing mine, but it's a story where I feel like the geology tells us there's a lot more to give here, and I'm very excited to watch this story unfold. Some of the people in this are people that I've known for many years. So I know they're smart guys, and I know they're going to do a good job. If it's there, they're going to find it. All right, let's go to the next slide. All right, I think this might be the last update I have today. This is Firefox. And I haven't seen a lot of news out of the company. They did hit some high grade at Mustajarbi, and I got to apologize. I think it was at a time when I was busy at one of the shows, and I didn't talk about it because I didn't see the news slip, and it slipped by. But this is a target I've been watching for a while. This Sarvi project this is in Finland. This is actually not all that far from the Kittilä mine that Agnico has, but it's also right next. This project is right next to Ikkari, which is the Rupert mine that's going to go into the development at some stage here. So you can see in this image, kind of the lower center portion of the image, that's all the planned infrastructure and open pit and whatnot for the Ikkari mine, which is a multi-million ounce deposit. That's a great ore body. And here we are at Sarvi, and we can see there's some really strong gold anomalies. Okay, this is the maiden drill program up here. We're going to see the first real effort by Firefox to drill this property. They've done all their till sampling and geophysics, and now I think they're in a very good position. So yet another drill story to look forward to. Now, one company I didn't put a slide in, but I talked about a couple of weeks ago, and I just followed up with the management is Magotes. People keep asking me what's Magotes doing. They're kind of quiet. Well, they are drilling. I heard that they started maybe 6 or 7 days ago, and they're all fully underway. I think given the altitude there, they're probably going to have to drill the lower targets first, is my gut, and then they'll have to step up. So things like Los Magotes and stuff might be in a month or two before they can drill there. But they have a great drill program laid out, and I think over the next 5 or 6 months, we'll see them test most, if not all, of the targets that they've got identified. So just giving people a verbal update on Magotes. All right, I think that's it. Let's see. Any more? Nope. All right, guys. Have a good week, and we'll see you guys in a couple of weeks. Have a happy Thanksgiving. Take care.
All right. Thank you, Quentin, and thank you, Tavi. For those who were listening on YouTube, I apologize with the technical difficulties we had. The first 5 minutes or so of today's show got cut off, but when we repost it on YouTube, you'll see the whole thing. For those on Twitter, I think the whole thing was live. But look, we're really excited about the opportunities in the markets right now. There's a lot of risk out there too, but we think we have some great positioning across our funds. If you're interested in getting involved, I encourage you to reach out to Merrick. His contact information is right here. Give him a call, shoot him an email, and look, we'll be back in 2 weeks. So thanks, everyone. Bye.